Hello and welcome to Mint Funds Update. My name is Marek Krzeczkowski and I'm joined by Ryan Falls. Today we will talk about diversified funds, what happened in November, and our outlook for the next year. We advocated for a long time that 2024 will be a strong year for global economies. That was the case, and we believe that 2025 will be a continuation of that soft landing scenario that we discussed previously, where inflation comes back to the range that allows central banks to cut rates. Now, if we look at expectations for different countries here on the left-hand side, you will see that for next year, growth expectations are strong, in particular in the US. Europe is where there is a bit of a struggle, in particular in Germany. But overall, it's quite a strong positive picture. On the right-hand side, what we believe will be supportive for the soft landing will be the interest rate cuts, which are currently priced in by the markets. And we believe that if we see any significant growth slowdown, these rate cuts will be supportive. Obviously, the biggest question on everyone's mind today are the trade wars, as we have President Trump coming to the office in January. We looked at the historical wars on tariffs and trade, and at least based on those two, I know it's a small sample, but at least based on those two periods. So this was a period from 1920 to 1940, and last time when President Trump was in the office, 2018, 2020, we did not see a strong evidence of inflation, that being inflationary. If anything, what you could see is that tariff hikes have a one-off impact on prices, but do not drive prices continuously. Here on the two charts, very briefly, I think what we're showing is that between the 1920s, 1930s, actually tariffs were deflationary, if anything. And on the right-hand side, this is showing when Trump was president last time. Actually, whilst tariffs have increased significantly, there was no spike in headline CPI US inflation. Now, obviously, the question is, what if? What if, Trump comes to the office in January and does something significant? Here we are showing you two scenarios. The first scenario is on the left-hand side, is a scenario where the tariffs are confined to China and cars from Mexico and Europe. In that scenario, we would see an increase in inflation, in US inflation, by around 0.4%. So that wouldn't be really significant. It is large, but it's a one-off spike, which should not really change the picture for disinflation for 2025. On the right-hand side, this is a scenario where, in addition to those tariffs, Trump's administration implements a broader 10% tariff on all countries. That's something that he mentioned before. In that scenario, inflation could increase by 1%. But again, we would see that as a one-off increase that would reduce the ability of central banks to cut aggressively if we saw a slowdown. However, this does not change the fact that we expect that disinflation to continue, and that would not create a situation where soft landing would not materialize. So overall, going into 2025, we are optimistic on the markets and within diversified funds. I'm currently overweight equities, and we hope that it will be a good year for bonds as well. And I'll pass on to Ryan.
Thanks, Marek. So I'll quickly take you through both the Diversified Income Fund and the Diversified Growth Fund. And we'll start off here with the Mint Diversified Income Fund. So the fund's up plus 1.6% for November. Asset class performance was broadly positive for the whole month. Markets were buoyed by continued growth optimism. So we had Australasian equities with the largest contribution to performance at plus 0.7%. Followed by global equities at plus 0.6%, and then finally fixed income contributed plus 0.2%, overall contributing to plus 1.6%. Turning to the positive contributors for the portfolio, within global equities, we had Tapestry Incorporated up 31.3% for November and Netflix Incorporated up 17.3%. They were the top two names for November. For Tapestry, markets reacted strongly to the news that their planned merger with Capri was to be terminated. And then they were also engaging in an additional $2 billion share repurchase program. Turning now to Australasian equities, Telix Pharmaceuticals was up 18.2% and Megaport was up 12.7%, and they were the two standout names in that section of the portfolio. Telix had a strong last few days of the month after announcing positive results for their phase 3 trial for kidney cancer imaging. And then finally, within the positive contributors, fixed income, we've seen a small rally in bonds as yields fell as some traders unwind some of the Trump trade positioning from earlier in the month. Looking at the negative contributors, within global equities, we had Roche Holdings was down 4.6% and AMD Incorporated was down 4.8%. Roche stumbled with the wider healthcare sector. This is after the appointment of Robert F. Kennedy Jr. to President-elect Trump's cabinet, which obviously came in January. Within the domestic equities, we had Precinct Property was down 3% and Stride Property was down 3.6%, and they're the two main detractors. And Stride slid after announcing earnings during the month, with some of the earnings lower than analyst expectations. Turning now to the Diversified Growth Fund, so strong month up 4.3%, and this was led by global equities, which was up plus 3.4%, followed by Australasian equities up 0.8%, and then finally fixed income contributed plus 0.1%. Looking at the positive contributors, we had within global equities, Tapestry Incorporated again and Netflix were both the top two as well for the growth fund. Looking at Netflix Incorporated, their shares surged after a positive reaction from markets on their successful expansion to the live sports streaming sector in November, with fewer numbers for their boxing event well surpassing market expectations. Again, within Australasian equities, we had Telix Pharmaceuticals up 18.2% and Megaport up 12.7%, the two standout names. Megaport surged in the news that it announced its expansion across Europe with 14 new data center locations in 7 different countries, and then also several new strategic tie-ups. The new data centers in partnership extend Megaport's service reach across different geographies. Turning now to the negative contributors, again, we had Roche Holdings down 4.6% within global equities, and then we had Fidelity National Information Services down 4.9%, and they were the two main detractors for the growth fund within global equities. Fidelity slipped during the month despite beating analyst expectations for both revenue and earnings in their release, with some investors taking profits following a strong year-to-date performance. And then within domestic equities, again, we had Precinct Properties down 3%, Stride Property down 3.6%, and then again, Stride slid after announcing their earnings during the month, with the earnings lower than analyst expectations.
All right, thank you for listening. And if you have any questions, please send them to info@mintasset.co.nz.